Good morning, everyone. So, this is the textbook which I am referring, Accountancy, first PU. Okay, we've seen this one. So, this is by Government of Karnataka. So, moving to the third chapter, recording transactions. So, from this chapter onwards, we are starting our problem papers. Okay, problems. So, practicals. So, here we are going to see what is a transaction and source document. So transaction involves give and take aspect. That is, we already learned the dual aspect for every one transaction. Each transaction it has two sides, two effects. So business transactions are exchanges of economic consideration between parties and have twofold effect that are recorded in at least two accounts. Okay, and business transactions are usually evidenced by an appropriate document such as cash memo, invoice, sales bill, pay-in slip, check, etc. A document which provides evidence of the transaction is called source document or voucher, which is familiar word to you. Example, when you purchase a computer, you will be paying cash. Okay? You will just pay cash and come back? No. When you pay a cash, you will get a bill. With that, you will be getting computer. So that bill, cash bill, whatever you are receiving, that is a source document. And the two side effect is you are paying cash and you are getting the computer. Now, what is accounting vouchers? There is no set format for accounting voucher. So transaction voucher. A transaction voucher with one debit and one credit is a simple transaction, and the accounting voucher prepared for such transaction is called transaction voucher. Now this is the format. This is a debit voucher. Here you can see voucher number. First under the debit voucher, name of the firm, then date, voucher number, that is the serial number of the voucher, credit account, to which account it should be credited, then amount, serial number, code, account name, amount, then the narration, that is the explanation. If the shop owner is selling the computer, then he'll be writing sale of computer. Then authorized by, who is the authorized person to sign in this one, and prepared by whom. And this is the credit voucher, almost like the same. This is complex voucher or journal voucher. Transaction with multiple debits and multiple credits are called complex transactions. Accounting voucher prepared for such transaction is known as complex voucher. So this is the format. So both debit and credit account in one voucher. Hope you can see this properly. What are the essential elements of an voucher? So these are the essential elements which must be there in a voucher. Name of the firm, date of transaction, serial number of voucher, name of the account to be debited or credited, then debit or credit amount in figures, description in the transaction, that is what we have seen, like narration or explanation, then name and signature of the person who prepares the voucher, the name and signature of the authorized person. Next is accounting equation. So the asset of business are always equal to the total of its liabilities and capital. So it is also called balance sheet equation. So this is the equation: assets equals liabilities plus capital. Okay, so we can split the equation in this way: asset minus liabilities equal capital, or asset minus capital is equals liabilities. So if you wanted to calculate the assets, then add total liabilities plus capital, or if you wanted to find the capital, then deduct all liabilities from total assets, or if you wanted to find out the liabilities, deduct capital from the total assets. So one example as given here. Rohit started business with capital of rupees 5 lakh. So it is in the form of cash. So in the balance sheet, if it is showing it is showing in this way. Balance sheet as on the date you have to mention. Then left side is for liabilities, right side is for assets. So left side under liability, we are writing capital because capital is a liability because the business is owed to the owner, that 5 lakhs. So that is why it is a liability, it is not an asset. But the owner brought that capital as cash, not in any assets. So asset side we will be writing cash in hand, which is 5 lakh. No other transactions. So both the sides, only one items will be there. So at the end, the total is 5 lakh both the sides. So here some more examples. Opened a bank account in State Bank of India with amount of rupees 4,80,000. So how we will be recording this one? How much you had? 5 lakhs. From the 5 lakh, you will be depositing in the bank 4,80,000. So here cash at bank will be increasing. That is an asset. And cash in hand will be decreasing. Again, there is a decrease of asset. Second one, brought furniture for rupees 60,000 and check was issued on the same day. That means you bought furniture but you didn't pay cash, you paid a check. So your asset is increasing. Your asset is furniture, and from bank your amount is decreasing. So there is a decrease in bank, that is decrease in asset because you paid check. Next one is, third transaction, bought plant and machinery for rupees 1,25,000 and an advance of rupees 10,000 in cash paid to Miss Raj. Okay, that is another enterprise. So here you will understand, you bought a plant and machinery for 1,25,000, but you're not paying full amount of cash. You're paying only 10,000 as cash. That is also an advance. So the 1,15,000 you have to pay later. So it will be, how you are going to write? The plant and machinery asset is increasing, right? 1,25,000 rupees worth asset is increasing, and how much amount you have paid as cash? Only 10,000. So from the cash it is reducing, your asset is reducing, and again your liability is increasing because you have to pay to Miss Raj later. By mistake I have written debitors. It is not debtors, it is creditor. Miss Raj is creditor. So you have to pay him 1,15,000 later. Now the fourth transaction is good purchased from Miss Sumit trader for rupees 55,000. So here goods is your asset, that is your stock. So your asset is increasing, and here Miss Sumit, you're not paying cash. Then otherwise it would have shown good purchased for cash rupees 50,000. So when the person's name or the trader's name is mentioned, you have to understand you have not paid the cash. So Miss Sumit is again a creditor. So your liability is increasing. The fifth transaction is goods costing rupees 25,000 sold to Rajni Enterprises for rupees 35,000. Okay, so I hope you have seen one difference. The goods actual cost is 25, but you are going to sell for 35,000. So what will be that 10,000 difference? That is your profit. So here the analysis is your stock, that is your asset. Asset is decreasing. 25 worth rupees asset your stock is you are going to sell. So asset is decreasing. Then again you sold to Rajni. That means you didn't get money. You didn't get cash. You have mentioned that person's name or the enterprise's name. So he is your debtor. That means you will be getting money later from that particular enterprise. That transaction is not over. One more thing you have to add there. You got a profit. So profit we will be adding with the capital. So profit 10,000 rupees. Now we will be preparing a balance sheet in this way with whatever information we received. So these are the transactions. 5 transactions are there, and on the basis of that we are preparing a balance sheet. we are preparing this balance sheet. So balance sheet asset, the date we have to mention. Then left side is always for liabilities, right side is for assets. And for both assets and liabilities, we have to show an amount column. Okay, so this is a format. So I will tell you how we got these amounts. Just have a look at the balance sheet. Now, here in the right side, assets, cash 10,000. So you will be wondering how we received 10,000, because the person who started the business, okay, who was it? Rohit started business with capital of rupees 5 lakh, and that was cash in so we have written that time cash in hand. So from that 5 lakhs, we have deposited in bank 4,80,000, right? So the difference is 20,000. So we had 20,000 as cash, but later we had paid an advance amount 10,000 to Miss Raj. So we are deducting that 10,000. So balance is only 10,000. So we have 10,000 as cash balance, which we are mentioning here in the balance sheet, cash 10,000. Next is bank 4,20,000. So actually we deposited 4,80,000 in bank. Then when we bought furniture, we have given a check worth rupees 60,000. So we are deducting that amount, and the balance is 4,20,000. That is the bank balance. Then about the stock, that is again an asset. So we bought stock or goods from Miss Sumit at rupees 55,000, right? So stock total amount is 55. Then later we sold the same thing to Rajini Enterprise. We didn't sell 55. We sold only 25, but it is for 10 rupees, 10,000 rupees profit. So that we are not showing here. How much we sold? Only 25. So we are deducting that 25,000 from total stock. So the balance stock is 35,000 only. That amount also we have to show in the asset side. So now about the creditors. How we got creditors? Total 1,70,000. So you will be remembering we bought a plant and machinery. The third transaction, plant and machinery for rupees 1,25,000, but we paid only 10,000 as cash, right? So from that 1,25,000, we have to deduct 10,000. We will be getting 1,15,000. So the creditors, Miss Raj, is 1,15,000. Hope you understood the amount how we got 1,15,000. The total amount was 1,25,000, and 10,000 we have paid as advance. So that difference is 1,15,000. Then again we bought stock or goods purchased from Miss Sumit for rupees 55,000. Okay, this is a transaction, and here the fourth one, and here also we didn't pay money or we didn't pay cash. Again, Miss Sumit was our creditor. So we have to add that 55,000 here. So the total amount will be, we are getting total creditors 1,70,000. So now the last item, we are moving to the profit, capital. Total capital, the Rohit started the business with 5 lakh. So the 5 lakh is our capital, and we got a profit of rupees 10,000. How we got the profit? The goods costing rupees 20. The fifth transaction, goods costing rupees 25,000 sold to Rajini Enterprises for rupees 35,000. That difference is called our profit, 10,000. That 10,000 we are adding with 5 lakhs. So the total capital will be 5 lakh 10,000. So now you will be knowing how we got these amounts in the balance sheet. Okay. And the other thing is, did you notice that both the sides are same amount, 6,80,000. So this is the equation what we learned just now, the accounting equation. Total assets equals total liabilities plus total capital. So here the both the sides, the same amount we are getting, 6,80,000. Hope you notice that one. Creditors are liabilities. Again, capital is our liability. Total is 6,80,000. And the right side, all the assets, cash, bank, debtors, stock, furniture and plant and machinery. The total will be getting 6,80,000. Hope you understand.